Two. All right. So here we are. We're looking at NVDA. Now, obviously, we had a good earnings by most metrics. It was a little underwhelming, is what the market is playing it out to be. The market's spoiled. It wants to see 40 billion plus. Always, and it's happened before. It's happened back here where we dropped despite the mediocre. I mean, I would say they were pretty good earnings, but the market took it as mediocre, and this is that example right there. So it was actually better this time than now, and they did drop. So I think there's a very real risk that this continues to fall. We are teetering on one of the most important price points. And going back to that initial video where I said there's always that possibility to go down because they had some sell side puts right here that initially were acting as a buoy and pulling price up towards that 135. But if they exit, then it was going to turn into real puts and it was going to really fall. And then there was a couple degrees of depth to that fall, and it could have meant different things, right? You can never know. We can just prepare. So I guess going forward, just keep in mind that certain levels that I highlight or outline are specific. I mean, it's not just a guess. So if it would have just came down here to close the gap and bounced up, most bullish case scenario would have been this. Also, the most likely, the most optimistic being that this was going to hold. Now, since then, the order flow changed a little bit and it always can change. What I see today is a snapshot. And even this is just a snapshot of a moment in time right now that can change Monday, can change towards the end of the day, right? But we can make some assumptions based on what we see right here. Now, the reason I put three different levels right here is because it was wholly reliant on um, three different price levels. Let's say if we got a little bit more depth than the estimated 129 initial dip, then I would have said that it would have opened up the possibility to see this 155 area. Being that we're down here now, this is actually almost the best case scenario because it gives you the biggest runway and the potential for the most buying to have occurred, right? Still not guaranteed. We're under this 121, which is monumental. It's a game of inches. Same like when Tesla was at that point where if it was able to climb above, I think it was 142, that was going to be the beginnings, or really, I mean, 342, 350. That was really going to be what we needed to see an additional run up. When that didn't happen, then it did open that drop, as I outlined in that video. So I tried to cover the two scenarios and where you want to see, or if you, depending on what you see, is what could dictate what's going to happen next, right? It's easy to just draw up a chart and be like, well, it's going here, but really discussing all the scenarios is my aim usually. So I'm trying to get better at least at discussing because it's in my mind as clear as day. Me trying to convey the message that's in my mind is a little different. But I'll mark it. I'll mark everything. So right here, this was actually, like I said, the best case scenario, also the most dangerous. The reason it's the most dangerous is because we are at the precipice, literally at 1 foot over the hill or over the cliff, and the other foot holding steady. So that's how close it is. And this, I've seen this a lot of times. And if you don't know what to look for, it doesn't seem like it. But to me, I I can tell, right? I can tell that that is the case right now. Now let's look at what's under the hood. Now this is very positive in my opinion. So what do we see? We're at here at 120. The white usually means that they're out. At some point there was 29. Well, there's 29,000 right here. And even this can be two different things. It can be that they bought on the bounce right here and they cashed out. They bought 124s at the beginning of the day and they're all out. It could also mean that they bought or not, and or they sold calls, and that's what's keeping price down because as we get closer to expiry, that premium goes down to zero, right? So when you're selling calls, you make money on the drop. When you're buying puts like this, you make money on the rise, right? So right here, these guys, they want to see these puts go up to make money. But yeah, So getting to what the red means. So right here, this to me looks like market maker activity. There's no way to really know if these guys are profit takers or if they entered with the idea to sell calls to keep price subdued. The positive sign right here is that they're out. One thing I talked about in the prior video was that 130 was heavy on the outright sells. As of right now, they apparently have exited completely. So just as expected, they were not going to remain in the game past the point. They probably cashed out right here because that's the prudent thing to do. They would have maximized their gains right here and right here, even though it's not that far. Because of theta, they would have lost a lot of money. So yeah, it was in their best interest to exit those 130 puts with expiry for today, which they did. But then it looks like they countered with the sell side calls to keep price subdued, which could mean two things. They're actually using this time to build up. We see a little bit of a buildup here. So if they're artificially keeping price subdued, is for the intent to build up their positions, right? That's how I like to look at it. And another thing, we see a lot of green on this side. These are puts. These are the red on this side is outright puts, real puts, 125 and 127. They're making money. They're not overly aggressive, not that many. Um, this right here, 117, this 2300 is actually holding price up. It actually was what helped price run up. They're making money as it runs up. And like I said, the positive is that all of these will be out. And what usually happens is it pulls price up, has a vacuum effect upwards. The tricky thing is that they can just roll them out 1 week and pretty much stay in the game. So as of right now, if they decide to not roll them, then it's a good thing. It'll pull price up, and we might have a low established, right? With some backing, with sell side puts lifting markets, providing liquidity for the sellers, which ends up whoever wants to sell that's going to buy these is going to end up feeling some pain. And then you have outright calls that are just positioned themselves to run it up, and you have the primary buildup right here, almost 12,000 at 130, right? So as these exit today, these are positioned to push forward. So it's a combination of things, right? It's like there's a lot of different angles working together, and sometimes they're not, sometimes they are. But either way, this also tells me that they're not giving up on the potential drop just yet. This means next week, this means 2 weeks out and beyond, or 3 weeks out and beyond. So we're still nowhere near in the clear just yet. To even have a chance, it has to regain this 127 and really 130. And then we see that 135 is going to be a major hurdle. 138, of course, 139, 140. So it's no easy task. Probably going to take a while. Might have to wait until the Fed to really break out. At this point, I wouldn't doubt, since there wasn't an aggressive pullback, I wouldn't doubt that we just kind of stay in this range for a long time. So yeah, good developments. We've seen the build in inventories. That to me suggests that at least it's starting to show in the numbers that companies are front running the tariffs. So that's going to offer the United States a buffer zone so that prices don't bite. So even if tariffs were to take effect in March, there's already a prior buildup that should mitigate the increase in price for at least as long as those inventories last. So we'll most likely see another build in February, because these are only partial numbers. Even the January partials are likely to go up, and the February partials and final are likely to go up as well. So I think, going out, it looks pretty good, which plays into the bullish potential here. But keep in mind, this is only a Band-Aid for a short time. When those inventories run out, we will start to feel the full pinch of the tariffs. The only difference there is, will the consumer take it upon themselves to change their spending habits and spend less, buy less, allowing that build to last longer? Or is the American people going to be like, oh, look at the tariffs ain't shit, let's keep on spending? Or are they going to freak out and be like, let's stock up and become self-fulfilling, right? Where we Americans end up freaking out, stocking up, and prices go up because the inventories run dry quicker, right? So it's a lot of what ifs and things that can happen. Today's price close is monumental as always. It needs to close above 121. We really want to see that end of day pull out by all of these. That'll signal it will actually have the effect to lift price, and that would signal a possible continuation. Now there is some wild cards that can happen. I seen a publication yesterday talking about, like, at 4 in the morning today, really, saying that tariffs had Mexico had come to an agreement to push back tariffs all the way until April. I have never heard of that publication, so I don't know how valid it could be. But if it's spot on, then that's one of those things we might hear about over the weekend, and we might get a gap up, right? Especially if we already have this set up and these guys set up right here and these guys all out, right? Even though these guys being out not so good, but yeah, they're still backing right here, and there's backing right here. So yeah, fun times. Fucking always at it seems like always the best trades are at the most riskiest spots. You never really know. The good thing about taking a trade right here, most likely, is you know fairly quickly that if we have a breakdown right here, it's time to exit and wait for at least lower down. Right. So yeah, and I stated before that it's difficult to draw a trend line because of how it's curving, right? But here you can. This was like you can. It does work. And look at, if we grab this whole little area, we are right at that point of control. We're at that spot. If we can just close above and prices get sucked back up and we cross this line right here, and really it could be this whole zone from 126 to 130 about. We want to get above that to really have a chance at something higher up. Something like this, I think, is still far out. Max gains right now is probably 160. Very optimistic. Only if it holds. That's it. No other way. All right. So that's my take on it. Hopefully that kind of explains it a little bit. But yeah, this could potentially become the best possible scenario that we could have seen. All right. Happy trading. Happy weekend. We'll visit this again next week and see how it goes.